Hi, I'm Pattu from freefincal. Let's talk about Nifty Next 50 and if it's time to exit from it. As I posted in Facebook group Asan Ideas of Wealth, if a child was born the last time the Nifty Next 50 had outperformed the Nifty 50 after expenses, or today it would be studying in the first standard or so. So the fund has not bet the Nifty 50 fund, an equivalent Nifty 50 fund, for 7 years now. In terms of index returns, that's now 6 years because expenses are now not included. So how much more of this can one tolerate is a question that one have to ask. So the first thing I can say is that, look, this keeps happening. So if you look at the 6-year rolling returns, the green line is the Nifty 50. I will just push it out here. The green line is the Nifty Next 50 and the yellow line is Nifty 50. You can see that during periods of sideways markets, the Nifty Next 50 has struggled to beat Nifty 50, and that's happened since until the 2013 bull market started. Before that it was the case, and now it's the case. So this is something that we'll have to be prepared for. So you can see here from early 2018 onwards, Nifty Next 50 started falling down. Then it crashed together with the Nifty, but it picked up, but it did not outperform. It just kept in pace, kept in line with Nifty 50, and in the last couple of weeks it has underperformed again. So this is a problem that you will have to ask yourself whether you are ready to accept this. Of course, I can show you 10-year rolling returns and say over 10 years Nifty Next 50 typically tends to beat the Nifty 50, but that's not a guarantee. There was a case here that did not happen, but there's a reasonable chance. Now, some people claim that we should not compare the Nifty with Nifty Next 50 because I'm using Nifty Next 50 for diversification and all that. Look, that makes no sense to me, because the only reason an investor should invest in Nifty Next 50 is for trying to beat the Nifty, because you take on higher risk and you expect a higher reward. Taking on higher risk is not going to make your portfolio any more diversified. So that kind of reasoning or excuse, whatever you want to call it, doesn't make any sense to me. Now, if you are so worried about diversification, then you might as well choose Nifty 100. It will be a little bit more better diversified than Nifty 50, but not too much. Now, the other argument I've heard is that many people complain that Nifty Next 50 contains the rejects of Nifty 50 and therefore it will not be a good index. But it will also contain the stocks that have been promoted above the mid-cap universe. So it cuts both ways. Also, the Nifty Next 50 has got much lower concentration risk than the Nifty 50. So if you look at the top 10 stocks, the weights of top 10 stocks, you can see here the first stock is 11%, that's Reliance today, and then it falls to 8, and then it falls to 7, then it drops immediately from 7, it falls to quickly to 6, so to the 1% drop, then 5, and then it keeps dropping, whereas the drop is much more gradual here. It's 4, it stays there at 3.83, and so it's a lot more gradual tapered down fall, and the top 10 stocks only account for 35 or 36% of the total weight, whereas for Nifty 50 almost 58% of the total weight is from the top 10 stocks. So the concentration risk is much higher in the Nifty 50 compared to Nifty Next 50. So it's almost like approximately an equal weight index, naturally equal weight index. It won't be exactly equal weight. So you can't say the performance underperformance is because of X stock or Y stock. You can't say that, because the weight is reasonably distributed. We have to make peace with the fact that the Indian stock market is quite shallow. Beyond the top 5 stocks of Nifty, the market capitalization drops down significantly, the liquidity is lower, the impact costs are higher, and we will have to accept that the Nifty Next 50 will be volatile and it may not always give you the reward for the risk you are taking. Of course, the volatility has come down recently for Nifty Next 50. That also is a problem. That means that the returns may also not be high going forward. You can't look at the past performance and say that's what I'm going to expect. So there are only two options I see it. The way I see it. If Nifty next 50 performance is bothering you, chuck it, get rid of it, and then enjoy your peace of mind. If you are willing to keep the faith with Nifty next 50, make it conditional. You can't have unconditional faith. How long are you going to wait? Are you going to wait for 7 years, 8 years, 10 years for it to beat the Nifty? How long are you going to wait? If you have a deadline, if Nifty next 50 fails to beat Nifty 50 within that deadline, by that deadline, get rid of Nifty next 50, because you have to take some cutthroat decisions without any regret when it comes to managing your portfolio. You can't have unconditional faith. Of course, we everything is a chance. We take a chance. Sometimes the chance comes good, sometimes the chance doesn't come good. We can't expect all our calls to come good. That doesn't make any sense. So you have to have, if you are willing to keep the faith, make it conditional. Don't just wait for it unconditionally. So this drought that you are seeing in the Nifty Next 50 performance is not new. It has happened in the past, but in real time it is frustrating, and it is a very frustrating index to hold. If it is not acceptable for you to hold, get rid of it. If you are willing to wait conditionally.